Hi, folks. Dan Bird here with the Daily Scan midday update for September the 9th, Tuesday. It is 11:30 a.m. on the East Coast. And let's see how the market's doing. As we head into the CPI number, I am not a financial advisor, so this is for educational purposes only, of course. Let's take a look at what's going on today. A little bit of a drawdown earlier. We'll see how it's looking right now. We'll go first to the 10-minute charts. Very quickly, you can see pretty much flat for the day. This is the S&P. Money flow is heading up, but the market is flat. Technology, not doing much. Financials is starting to come back. Discretionary down slightly. Communications pretty flat. And industrials is dropping. Those are the aggressive sectors. So the defensives, healthcare slightly up. Staples flat. Energy up slightly. Utilities flat. And materials is down. Materials is where gold is. We're going to take a look at gold today. Rotation, growth versus value, slightly lower. Discretionary versus staples. So all of these technology, semiconductors, flat, internet, these are all not really showing anything strongly one direction or another, but slightly lower as the market pretty much treads water. Probably waiting for that CPI report. And then the Russell 2000 small and mid caps sold off in the morning, quite a bit actually. Now trying to make a comeback. We'll see how this ends the day, of course. Money flow is also down for the small and mid caps. And growth versus value for large, mid, and small caps. Looks like the mid caps are hanging in there the best. Large caps actually are rolling over. They're the ones that have been holding the market up, so that's never a good sign. And then the NASDAQ 100, same thing, moving sideways. Advancers minus decliners are way down. Up volume versus down volume is low. It's not red, but it is low right now. So the whole market looks like it is just waiting to see what's going to happen. All right, let's go take a look at the dashboard real quick. And we can see crypto right here, Bitcoin starting to fall off. It started higher and now it's heading much lower. And Ethereum as well, same thing. They are pretty much neck and neck, but Bitcoin falling off a little bit faster than Ethereum, but both of them declining. Commodities, gold started off higher. Now it's starting to pull back. Silver is lower today, and oil is higher for the day. Bonds, 10-year yield is up. 20 TLT, 20-year bonds are down, and the dollar is up. So pretty much the opposite of yesterday. And then in equities, the Dow looks like the biggest winner for the day. NASDAQ 100 is down a little bit. S&P 500 is up slightly, just ever so slightly. So this is what I showed you, basically the market moving sideways. And sector summary, energy, financials, and healthcare are the three top ones, and utilities, number 4. Communication technology are right in the middle. Those are the aggressive sectors, and discretionary is moving towards the bottom. So overall, it looks a little bit bearish. The advancers versus decliners, or breadth, more decliners than there are, fewer advancers, I should say. It's red, other than energy. Energy is the one on the top right here, one that's doing the best. And Synopsys reports tonight after the close. We'll see how they do. And over here, the top 10 combined list, Nebius Group had a really big, nice run today. I don't know if they had earnings today or not, but you can see they're up 44% on the day. And it's actually pulled back from the high. So incredible run. Again, these top 10 stocks are really good ones to watch. Keep an eye on. Best Bed Bath & Beyond looks like it's getting ready to break out. Let's go 2 levels down, see if there's anything here. Coin, it's really been right at the bottom. Looks like it's might be starting to make a comeback, but not too convincing yet. ZEP is one of the ones that has been in the top 10 the last few weeks. You can see that chart is just a 45-degree angle up, and it looks like it might be starting to move higher again. This is another one that's been on the top 10 for the last few weeks. Par Pacific Holdings. And let's look at the bottom of the list. AST Mobile, Newegg, which has really just been clobbered, made it up to about 130, and now it's down to 36. So Life 360, nice run higher, pulling back a little bit. Let's see, Solar Edge pulling back quite a bit today. Wriggle actually looked pretty interesting, and now that's pulling back. I think they had earnings today also. Sunrun, same group as Solar Edge. They're pulling back as well. So alternative energy looks like it's starting to head lower, and Fox looks like they reported and are moving lower today too. So let's take a look at the market carpet real quick, just see what it looks like. This is just for the day. Google and Meta are the two winners. Clearly, you can see there's some red over here. Broadcom, Oracle reports after the close tonight. Also, Nvidia, Microsoft, and Apple aren't doing so great. Industrials is that whole area is red over here. Staples is kind of mixed. Energy, as I said, everything's green down here in energy, so that looks like the best. Healthcare, not too bad. Lilly is up 1.5%. So the two winners looks like Google and Meta for today. And United Healthcare is at the top, up another 7% today, along with Supermicro. So these are the two big winners for the day. Let's take a look at the relative rotation graph. And for this one today, I want to look at daily 3-month, and I want to take a look at the major indexes. So here are the major indexes. You can see NASDAQ 100 moved from leading to weakening. This is the S&P 100 also starting to move lower. The S&P over here moving into the lagging area. If we take a look down here, you can see utilities, Dow Jones, and S&P are in the red lagging area. And in the improving is transportation, small cap, and mid cap. So small and mid caps are the ones that look like they're improving slightly, but the big indexes are heading lower. So that's not a good sign. All right, look at a couple of scans. So I started this one here. This is these are all weekly. You have weekly options. This is the bearish scan that I have teed up, and DraftKings right here. DraftKings falling below its 21. The 5 is getting ready to cross the 21, so that's a short-term down signal right there. And momentum is heading lower. So DraftKings looks like it is poised to perhaps head a little bit lower. Caterpillar is also on this list, sitting right on its 50-day. Boeing sitting right below the 21 and right on the 50. Materials, these are the sectors. Materials heading lower significantly. Industrials, also big time sell-off on industrials, and real estate. Real estate's just kind of hanging in there right now. If I look at the bullish side of these, and then we're going to go look at gold here in a second. Bullish, JP Morgan, Norwegian, Okta in the software group. Financials going well. They're coming back. Wells Fargo starting to come back today. All right, let's go take a look at gold and silver in particular. I have a chart right here. This is for subscribers. This is on the charts page. Gold and silver chart right here. You can see right here, this is the top one is the absolute performance of gold versus silver, and they are pretty much neck and neck right now. The US dollar clearly selling off. This is year to date, so since the beginning of the year, dollar selling off as gold is going higher. And this is year to date relative performance. That means they all start at 0 at the beginning of the year. And in this case, silver right here in July overtook and actually outperformed gold, and is still outperforming gold right now. So silver, both of them look great. Silver looks like it's a little bit outperforming. So that's what those look like. I also have an interesting chart over here that compares gold with Bitcoin and actually shows when those two switch. So right here, Bitcoin using the ETF IBIT and gold using the ETF IAUM. You can see here, the one on the top, this is gold, has had a nice run higher. Here's IBIT, Bitcoin is starting to move lower. And down here is the relative performance of the two of those. So one relative to the other. First, at the bottom, you can see that they are highly uncorrelated. So they don't often move together. And because of that, you can determine when to move from one to the other. So right here is the relative performance of one versus the other. It's gold versus Bitcoin, IAUM versus IBIT. So when they cross like here, that right there, that's the time to sell gold and buy Bitcoin. So right in through here, sell gold. Gold just went sideways for quite a long time. But Bitcoin had a nice run higher. And then on the opposite side, just recently, in fact, right about here, show you exactly where this happened. There is the crossover right there, right here, just as gold was getting ready to break out of the sideways channel. It's actually the day before it broke out. So it crossed over right here. This is telling you to sell Bitcoin. You know, Bitcoin had already been starting to move lower, and buy gold. So this is a chart you can use just to figure out how to move from one to the other. Since they are uncorrelated, they usually move in opposite directions in general. Doesn't mean they always have to, but one might just go sideways like gold did while the other one goes up. But this gives you a sense pretty quickly of when to be in one or make a transition out of one and into the other. So this is a good chart to keep an eye on the website. Again, it's on the charts page on the left-hand column in this whole Bitcoin section over here. It's right here called IBIT versus IAUM. You can also look at Bitcoin versus MicroStrategy. And you can see these two had been highly correlated, but now they're becoming uncorrelated, which I think is really interesting. MicroStrategy is actually falling off much faster than Bitcoin is. So this is telling me that MicroStrategy as a company, even though they have been considered a proxy for Bitcoin, sorry. However, it's still a software company that does report, and they've got earnings, etc. So it's not the same as Bitcoin. So if the company is not doing well and they start to move lower, they might have to sell some of their Bitcoin in order to stay afloat. But right now, what this is telling us is that MicroStrategy is becoming uncorrelated with Bitcoin. So it's moving lower much faster than Bitcoin is. The real key is to see what happens when Bitcoin really turns higher, to see what MicroStrategy will do. Will they continue to go lower, or will they turn up? But this is not a good look for MSTR. While I'm on this, let me do because somebody asked me about this, I'm going to do a simple summary of BMNR and MSTR. I want to do a gallery view. That's what I want. BMNR versus MSTR. That's what I want. All right, so this is Bitmine Immersion Technologies. They are trying to take the same approach as MicroStrategy, except using Ethereum instead of Bitcoin. So we'll see how that works out, but we can compare the two. This is an intraday view. Let's look at a daily view. You can see MicroStrategy clearly falling off, where Bitmine is just basically moving sideways. On Bitmine, the RSI and, more importantly, the money flow is dropping off pretty significantly. Very low volume on the sideways move, though. So we'll see. And then on a weekly view, a longer term view, you can see this is where BMNR made the announcement of what their strategy is to move to Ethereum, to basically be a proxy for Ethereum. They're starting to acquire Ethereum. Similar strategy as MicroStrategy over here. So you can just see the two of those on a longer term view. It'll be interesting to see how that plays out. This one's selling for $43, whereas MicroStrategy is at $325. So it's certainly a cheaper way to play that strategy or that space. But I think the jury is still out to determine if that is going to be successful or not. So that's what those two look like. All right, something else I wanted to show you is the phases of the market. So I have a chart over here on the left-hand side under weekly analysis and the daily routine down here. This is a S&P market cycles chart. So this shows you what the current cycle is. This is actually, let me go back here. I just added this little graphic here. So if you want to understand market cycles, click on that little graphic, and you see here, this is the accumulation phase at the bottom, markup phase. There's sometimes consolidation in the middle. Then we get a distribution phase at the top. This was a classic, what happened just before February. I've been talking about this since December, warning people that this was a classic market topping pattern. And that's exactly what happened. We had the markdown phase from February to April, and now we're starting to head back up. Below this are the market and economic cycles, which shows you that the market moves well ahead of the economy. So when people tell you that the economy is doing bad, then typically the market has already priced that in and is starting to bottom. So the market will move higher before the economy goes into a full recession. You can see right here, here's the market bottom for stock market, and here's the recession right here. So the market will move sooner, 6 to 9 months before the economy. So don't pay attention to any of the news because you're already late if you start doing that. But this is the key thing right here. So now if I go back to the chart, this is the actual chart from last year, the whole year of 24. This is the accumulation phase. There's the markup phase. Here's the distribution phase that I talked about. Then we get right here in February, the markdown phase down here. And now we are in another markup phase. So as you can see at the top, as this starts to roll over, kind of get rounded, does that mean we are going into another distribution phase? Well, I don't know. There's no way to know that just yet. We could be another reaccumulation. We could just move sideways for a while and then take off higher. We don't really know until we break through the bottom of this distribution phase. And that probably is somewhere around 63.50, pretty much where the 50-day moving average is. So that's the level to watch to see if we break down through that. We can get all the way down here. We can really get all the way down here to this support level right here and still have our bull market intact if it turns around and moves higher. But this is an interesting thing to take a look at just from a historical perspective. It's important to study these kinds of things and understand how markets move because they will move the same way again in the future. All right, so that's kind of shows you what that's doing. One more thing that I added is on the charts page near the top. This is pretty interesting. I saw this from another poster comparing XLP, which is Staples, to the S&P. So this is a relative chart, which means if it's moving higher, this is Staples versus the S&P. If it's moving higher, that means Staples, usually one of the most defensive sectors, is outperforming the S&P. And you can see right here, this is during the .com crash. Started to move higher. It went way down. By the way, notice where we are right now. We're right there. We're basically at the same level we were way back in 2000. And then it reversed, these are monthly bars, by the way, started to reverse. And through this whole period when it was moving higher was the recession back in 2000. Then it happened again. We got to a low right here and it reversed, started to move higher right in pretty much the middle of 2007. The financial crisis didn't really get started until 2008 or the end of 2007, but Staples had already started moving higher right there until it hit a peak right here, basically 2009, which is when the market bottomed. And then we went sideways for a while. And now right here, this is the 2002 right there. This is the beginning of the 2022 bear market, cyclical bear market. You can see we had a big positive month on the XLP right there. Just before, that's pretty much December right there. Just before, I'll tell you exactly when it is. Yeah, December 1st. That's the month of December right there. So just before we went into that cyclical bear market through all of 22, Staples was giving us the warning the month before that. And then it hit a peak right here, started to come down, and we've been in a bullish configuration ever since then. And it is still bullish. This has not reversed. This has not started to go higher yet. However, it's pretty darn low. So something again that we should continue to watch. If we get an extended period where this starts to move higher, remember these are monthly bars. So if we get a full month where XLP starts to move higher, then we probably are in for an extended downtrend. But that is not what it's saying right now. It's saying that we are still in a bullish trend. So just an interesting chart. Again, it's on the charts page in this section right here. This is basically the bottom finding section. So we can look at volatility. Volatility shows us the 3-month versus the one month VIX. And even though it's extended up here above 1.2, the two have not crossed yet. In fact, the 1 month VIX is actually moving lower quicker than the 3-month. Again, this is bullish. So in general, it's pretty bullish for the market. Before I log off, I just want to take a look and see what gold is doing today. We'll use GLD. And it's still moving higher, black candle, so went up and now it's pulling back right now. So gold still is extremely bullish today. All right, that's it for now. Hope everyone has an interesting day. We're going to get CPI later, I think Thursday morning. CPI comes out, so we'll see what happens with that one. And let me know if you have any questions, comments, or anything you want me to look at. Please like and subscribe so that we can continue to keep this channel moving. And I really appreciate everyone's comments and also requests. So be happy to take a look at those. Thanks, everyone. Talk to you tomorrow.